Good Friday morning, Market Chameleons, and everyone joining us for the first time. Welcome to the Market Chameleon pre-market show with myself, Will McBride, and the main man, the myth, the legend, all the way from Philly, the King Chameleon, Dimitri Pargamanik. How you doing, Dima?
Good morning, Will. How are you?
Excellent. Do you want to start with a disclaimer? It's up and running.
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. If you need professional advice, call your broker or your registered investment advisor. That's what they're there for, to give you advice, provide you with guidance. There's the disclaimer. And
Excellent.
With that, I guess we'll take a look at the pre-market report. And as
Crazy
usual,
day yesterday, huh?
Yeah, really crazy day. With Facebook and the market in general.
Yeah.
So that was like, what was that, like one of the worst or the worst Facebook?
It was the most market cap lost in a day by any company.
Wow.
And the worst day ever for Facebook, which is amazing.
And we talked a little bit about that. We'll take a look again about the illiquidity in general of the stock market. We're getting much more volatile, and we're seeing it on the sell or buy side, right? It's very hard to move in or out of stock right now. And I'll show you some examples of that, but it didn't only happen to Facebook. We saw it in Netflix, and we even saw it to the upside in a couple stocks. What was it, like Google? I think maybe we'll take a look at Amazon today. So upside or downside, right now we're getting some earnings. Facebook was in earnings, and when a lot of stock is trying to get in or out, we're seeing much wider price moves than historically. So I think maybe we'll take a look at that today. We'll look at the pre-market report, kind of see if we get any insights from the pre-market movers. If you guys have any questions, you can put them in that live chat. Will's monitoring them. He'll read them back to me. If you want to come on and ask your question live, we also put out a Zoom link there. You can click on that link. It takes you over to Zoom. You raise your hand. You don't have to turn on your video camera, but you could ask your question directly. So if while we're waiting for anybody, any questions to queue up, I'll just start looking at the pre-market, take a look at what's going on today. Sound good, Will?
Perfect.
Yep. So here, these are stocks that are trading the pre-market hours. We have the most active stocks, biggest percentage gainers, biggest percentage decliners. And come down here quickly, I see 84 stocks made our percentage gainers list, 53 on the percentage decliners list. So a little bit more favorable towards the bullish side from that perspective. But we'll take a look at a couple of different other filters. Let's first take a look at what's going on in the S&P 500 stocks, maybe stocks that have report earnings. And I'm going to use some of these other filters that we don't really use from day to day. So first, let's just see what's going on in the S&P 500 stocks. I'm going to drop this filter here, I'm going to select SPY, which is the S&P 500 ETF. By doing that, it's going to filter out holdings in the SPY. So I see 10 made the percentage gainers list, 20 on the decliners. So there we look more of a bearish bias at the open from market breadth wise. And I do see Amazon up there, up 11%. They reported earnings. And I see some of the social media stocks are up today, rebounding from yesterday's loss. And I think some of them reported earnings as well. Let me just unfilter this list real quick. So I see Snap up 41%, and that looks like it was on earnings. Before I go into the insights, let's just see how many stocks, if they open at these levels where they are in the pre-market, how many of them are going to be making a new 52-week high versus 52-week low. So if the stocks open up where they are right now in the pre-market, and we look at new 52-week highs, there's about 12 of them. So these stocks would be opening up at new 52-week highs. All right. And a lot of them look like they're oil related to me. Well, what do you think? let's take a look at the 52-week lows. So 12 on the 52-week highs, only 3 on the 52-week lows, which is pretty good. So we got VNDA, CLX, CSO. What if we used yesterday's high and low? All right, so if we just use yesterday's high and low range as the kind of fair value range, right? But we break out of it. So this will be, yesterday traded in a range, high, low. If it kind of opens and breaks out of that, we'll use that kind of as the initial fair value. So yesterday's previous high, if I click on that, so you got 38 there. 38 stocks are already trading above yesterday's high. A lot of them are earnings, so that is not a big surprise. What about yesterday's low? So these will be breaking through yesterday's channel, yesterday's low. So got 52, so a lot more. We got this one. So I think this one probably had a dividend yesterday. Right, so yesterday had a dividend, that's why it's there. All right, so you could see there's, kind of a mixed market breadth. I would say right now it's a little bit more bearish than biased from that perspective. Let's do the ones that had earnings. Let's just look at those. So here are a bunch that are earnings. 8 stocks reported earnings are on our percentage gainers list, 8 on the decliners list. Mixed bag there. If there are no questions, I'm going to come back to this, but I'll show you guys what I mean by, the market's moving around, and a lot of people also at the same time use options to play earnings events, right? So when you're doing that, you got to take into consideration the other factors that the markets are moving around. And now they could be less liquid than they have been historically, right? So even if we're comparing them to historically, what's going on today, something different. Markets are kind of getting repriced with volatility. We got, interest rates, geopolitical risks, inflation, all types of things that are right now hitting the market that are triggering a lot of models to reprice stocks and to reprice growth rates, right? And the markets usually will tend to do that much faster than any analyst, right? Like yesterday, Facebook was down and then the analysts downgraded, but they don't downgrade it prior to that, right? So they're like reacting to it. So the markets also kind of start repricing things much faster than analysts, and that's why you're paying attention to it. So let's take a look at, for example, just to give you guys an example, like Netflix, that when that reported earnings, we'll take a look at it. And what I'm doing here, I'm showing you the bars that prior to earnings, the options traders, right, are trading these options. And if you look at the front month at the money straddle, so at the money, you're buying the call, buying the put, you're purchasing both options. The stock has to move by a big enough percentage to cover the cost. And if it goes above that, it's profitable. Below that, it's not profitable. So that's what these bars are right before earnings. Where was that move priced? So you could see here in Amazon, that even though the options were pricing in, an 8.1% move, which is on the higher end, I think, than historical, right? So historically, 7.9%. So a little bit going in there, they were a little bit pumped up. But you could see how liquid it was, that on the downside that day, it was down 21%. So, let's go. What were the other ones that report? Well, Facebook, let's take a look at that. So you could see Facebook, kind of similar situation. These are high. These are the, higher market cap. These are the, what do you call these stocks? Well,
FANG stocks.
FANG stocks. So look at this one. 7.5% moved down 26.4. But now I'm going to show you on the upside, right? That's why it's important to always consider what else is going on in the marketplace. So here's Google. predicting 5%, you could see that was up 7.4. I think it was even in the morning, it was up even more than that. We could see that these are really breaking out either to the upside or to the downside. And a lot of it is just general illiquidity in the market because it's happening in lots of places. There's Google. Let me see where Amazon. So Amazon's reported yesterday, right? So this is Amazon. So Amazon reported yesterday, right now 10.5. And you could see here, even with an 8.4% straddle, broke right through that. So very liquid, hard to move stock in or out. Is that making sense to people? Like where the
and the straddle on Amazon was even pricing that, like that new
we're talking
illiquidity in the market. It was the options were pricing it, and it still wasn't pricing it enough.
Yeah, they can't price it enough. Like you could see that. And Amazon was a weird one because they were, even for 2 days, they were underpricing. They had pretty big moves heading into. Let me just take a look at the moves heading into.
This is a situation where it seems like things have changed in the marketplace. So if your strategy was, selling straddles or trying to take advantage of the premium going in there, you may want to rethink or at least protect yourself.
Exactly, because when you're seeing lots of volatility in the market, right now, you got to compensate that things are potentially way more illiquid than we've normally seen, right? That these stocks are, going to move in higher ranges than we've seen in the past because of what's going on in the market.
And it may also be a dynamic shift, right? Interest rates are moving up for the first time, and we have inflation. So that easy access to money that, allowed this carry trade, everything like this to exist may not be here anymore. So that, for the people who are making markets, there's less liquidity.
Exactly. There's less liquidity. It's going to be more expensive to carry risk. And, it's been telecast kind of, we didn't move it, but the market now is starting to say, okay, change our models, right? And now you're seeing that. You're seeing models being recalibrated, reforecast, and the stocks are moving around. So you got that going on. Something to consider when you guys are, just setting up, looking, even if you're looking at the past, you got to look at, well, what's different today? How do I handicap it? So let me go back now to the pre-market report. We talked a little bit about the insights down here. So let's take a look at that again. And this is looking at the last 20 days, right? In the last 20 days, what's been going on with these stocks that have volume pre-market. They're moving in a pre-market, some are moving up, some are moving down. What happens to these stocks after the market's open, right? So you got, right now, we could see that a lot of these stocks are getting pushed higher, right? These on this side, a lot of them are getting pushed lower. They got volume in there. They're going to open up. Some are going to open up. Some are going to open down. What tends to happen to these stocks? Because obviously there's already interest, right? There are people looking at them. There are people entering orders and trading them before we even opened up. So the assumption is they're reacting to something. There's definitely already interest in it. What's the follow through? So that's the question right now we have. And we're going to look at different situations. So let's just start with the gap up, right? We got Amazon, stuff like that. So on the gap up, right, there's a gap up, gap down report. So you could see overall in the last 20 days, we had 2,267 observations. And by 10 a.m., those that gapped up, half were up, half were down for slight loss. By the end of the day, 61% of them were lower from the opening price, right? So gapped up, opened higher. By the end of the day, 61% closed lower for 1%, on average 1% loss. So it's saying that they did not, for the most part, follow through on more gains, right? They've actually given back from the opening price. They tended to give back. So what about the ones that reported earnings? Because this is the entire group. What about those that gapped up and had earnings? So I'm going to put has earnings, right? So it's going to refilter the data here below. So we have 85 observations. Those that gapped up and had earnings, you could see after the open, the first half hour, which we see, that's a busy hour, right? The first half hour, because that's going to be your initial flood of orders. It's not just VWAPs, but you got people trying to really rebalance their portfolios, get in, get out. So by 10 a.m., 60% of those were lower. So, for an average of a loss of 0.3%. By the end of the day, it improved a little bit on this front. So only 56% of them were lower, but on average, there was a loss of 0.9%, which is telling me as the day went on, those that were retreating gave back more and more, right, than 10 a.m. So 56% of them that had earnings were up on a day, were lower from the opening price. What about if they had a big gap? So here, I'm going to keep filtering this list. And let's say we're looking for those that gapped up 5% or more, right? 5% or more. So then we have 31 observations. So we could come down here and we see Ralph Lauren, T-Mobile, Google, AMD, all these. You could, if you slide over to the right, this is the opening price. This is the percentage gain from the previous day's open close. So it gapped up 7.3%. But you could see here, 10 a.m., we're down 2.8% from that opening price. Closing, we're down 3.6% from the opening price, right? So these are the stats we're looking at. So those that even opened up higher by 5%, you would think like, okay, they're showing some confidence there. 61% by the end of the day were lower from the opening price for an average loss of 1.4%, right? So only 39% added to the gains, 61% retreated. Let's take a look at the higher market cap stocks. Maybe it's different in the higher market cap stocks. Or you know what? Let me look at NASDAQ. So let's look at QQQ, right? Like Amazon, Netflix, all those. So here's the QQQ. So only 7 observations. Okay, not a great amount of observations, but we still have 2, the report to kind of reference. And we see that out of those 7 that were in part of the NASDAQ, opened up higher by 5% after reporting earnings. By 10 a.m., that first half hour, they all retreated. Not a big list, but they all tended to retreat, right, in that first half hour. By the close, it was a little bit better. So some of them, by the close, drifted higher. Some did not. So 29% of those did close higher from the opening price, 71% lower. So, for an average loss of 2.8%. So if you're getting into that, you got to be careful because you could see, if you're just throwing darts at it, 71% did retreat. Let's take a look. I'm going to.
Hey, D?
Yeah.
We did get a question which was interesting from Rob, actually so interesting that other people, I think, were hoping that I ask it to you. He's asking, how can we determine stocks that tend to keep their liquidity during the market downturn? And I don't know if this is totally market downturn driven as much as it is change in market dynamics. But anyways, that's his question. Although a bear market will hit all of them, it may best be stay in those that keep trading. I guess how do you determine which are more illiquid? Is there any way to do that?
I don't know if you could answer that in generally. I could show you where historically they were, but the thing that we're having, it's like what's different today, right? So some of them are also have earnings, right? So those are also reacting to earnings on top of the illiquidity in the market. And why is the market going down, right? So right now, there are stocks that are not getting impacted on it specifically right now in the energy because energy is going up. So they're not getting impacted as hard as technology stocks, right? So you kind of have to take why is the market going down? You know, what are the circumstances and which stocks are going to be the most illiquid in this scenario? Um, and sometimes history will not, sometimes you could look at history, sometimes you might not be able to. Like during the coronavirus, we're going down, everything was going down, right? So it's like the stock market was just going down. Nobody knew what was going on. It was just risk off. But if you look at like stocks right now in the energy with oil, where's oil right now? It's like near $90 a barrel.
That would be correct.
So right now, defensive stocks and energy stocks are not getting impacted to the downside like the rest of them. Not like, these tech stocks that have very high valuations based on like growth, these other very high risk stocks that are based on new technologies that have not yet fully kind of been established or developed, and you're investing in them. Like, I would almost put Tesla at this point in this group just because of its valuation, right? Because you got very high valuation. So at that point, you're waiting for the revenues to catch up. But let's just take a look at, for example, where's XLE, right? So XLE right now is really at the high, right? Near its 52-week high. And the components in there are doing fine, I think. They're not getting impacted as much. And that's because of the inflation they're benefiting from those higher oil prices. Let me just take a look here. So here, look at the, all the gains, 1 year gains. These are the holdings, right? These are the holdings in the XLE. And you could see here, look, last 2 weeks, what is the market down with what in the last 2 weeks? Let's even see in the last 3 months. So in the last 2 weeks, I only see 2 stocks that are down. And in the last 3 months, only 1 stock, right, that is actually down for the 3-month period. And if you could compare that, I don't know, in SPY, I think, something like over 20% of the stocks in S&P right now are in bear market. I think they're like down more than 20% from their 52-week high. So I think like the answer is you have to kind of pay attention to what's going on, what are the circumstances, and where is there, illiquidity, why are people getting out, why are getting people in? Remember when the internet bubble was popping, Will? It impacted stocks, but the liquidity, the illiquidity was in those internet-based stocks at that point, right? That's where most of it was. And the stocks, some of the stocks that were going down were not going down as hard just because it wasn't in that space. So I think that's why, I could show you where probably Facebook and Amazon were, and Netflix held up while the market was going down, and depending on the circumstances, now you could see they're going the other way. And Amazon did pretty good, actually, right? They're up 10% right now. Excuse me. Does that help?
Yeah, no, that's really helpful.
Is that right? So just take, kind of, you got to maybe pay attention what's making the market move, why, and which stocks are getting impacted, by it. And if it makes sense, right? Does higher interest rates, the uncertainty, like, where the valuations, like, does it make sense where people are repricing, where things are less liquid? How did Apple, let me just take a look at Apple reported earnings, right? I'm just seeing if the same situation happened there. So this is Apple. So yeah. So whenever you see it break out to that through this bracket, it basically, escaped where people thought it was going to trade in that range, right? So that straddle also underpriced, and that was to the upside, right? So it was liquid to the upside on that
Hey,
move.
hey,
Yeah,
D. Lawrence is
yeah.
asking. I know we only got a couple minutes left, but since we've been talking about it, are there any earnings coming up where the straddle may look cheaper than you know?
Yeah. Um, I have to we could take a look at it, and it would probably be here. I was looking at it yesterday. I was thinking about actually the Amazon, and then I was like, you know what? It's it's a
Like
very expensive. Uh,
in the upcoming
Yesterday,
earning
but
analysis, I'm thinking.
yeah. So here, you do have the report here of the upcoming earnings, and now that we're Friday, so Monday will be the next reported. I don't think Friday anybody reports after the market. If they do, it might be like one or two out there, but I think the next ones will be either Monday morning or Monday after the close. But these are yesterday's straddles here, so you could kind of take a look at it, and you could compare it to the historicals. But keep in mind at this point, take a look at these stocks, you know, what they're doing, and do you think what is the handicap they deserve for the liquidity? And some of it might be energy, and I'll take a look at how the energy is performed after earnings. Here, let me see the energy stocks. So these are energy stocks coming up, but let me go here to the summary. So I have the energy over here, and this is how the energy stocks in the last 2 weeks performed. So 30, almost 38, 39% of the stocks were up after reporting earnings, 55 were lower. These are the, average range that these finished up or down. But you could see here that 56% of the straddles were losers, 43.8% were winners, gainers, and on average 28.7%. So, do the math. If, on average, they've been underpriced or overpriced. I should probably add that in there. But it gives you an idea. Well, here are the energies. This is what the energies were. Let's see, for example, really quickly, technology stocks. These are technology stocks. So 73% of them, the technology stocks, still the straddles lost on average 29.7%, 26 were up 47. So it kind of gives you the
Hey, D, really quick, can you just show how you got to this page?
Yeah. So under earnings, upcoming earnings analysis, I might change this page to be more graphical. I might do the same data, but in graph format that makes it easier in the summary, easier to consume. I think maybe that going forward, it'll be easier to kind of show what's going on. A lot of people I like visual too. I like tables, but I like visual too. So I might add some visuals to it. But we're right up at 9:30. Well, were there any?
No outstanding questions. If you do have any questions, this was a real in-depth show on your platform. Lawrence Smith, I would go to our YouTube page. There are a bunch of tutorials. And D, can you just show them where the tutorial pages are on Market Chameleon, the videos?
So under help, there are video guides. If you go down here, we put in stock, options, or earnings. So if you go in there, you get, you could keep drilling down to see the videos. They'll pop in here. Of course, if you go to our YouTube channel, or if you just go to YouTube and Google like Market Chameleon, something you're, how to use the option block trade screen or something, you should be able to find it because YouTube has a good search engine.
Yeah, and again, Lawrence, I know at the start everything looks overwhelming, but a lot of people on this chat have been on a long time. I know we're probably one of the few places out there that do a live show every day, and we open it up to questions, and all the people who are involved in the chat today, all the chameleons, are super helpful. There's actually a Discord group too that you could join if you want to join that. I will put that in the chat. Again, take your time. You know, don't it's not all at once. It's a process of learning. D, great job, buddy.
All right. Thanks everyone for joining. Stay safe out there. Have a great trading day. Have a great weekend and hope to see you guys on Monday.